Hello and welcome. Today, one of the most important topics, practically as well as theoretically, tax deducted at source. TDS. I mean, a lot of people, a lot of students already are aware of TDS provisions, specifically at final level. You're already doing work in offices, unless, of course, you're not going to office regularly. Now, I'm going to try and do the very basics of TDS in the beginning in this topic as to what sections TDS is deductible under, what are the consequences of non-deduction of TDS, what are the minimum amounts over which TDS will be deducted, what are the rates of TDS, is surcharge added to TDS. It's very easy in the practical life to get a query as to whether TDS is deductible and then go open the books and look at the sections and the rates and give advice. But sadly, as I keep saying, that luxury you don't have. In the hall, the data has to be here. So what we're going to do today in this topic is to summarize the provisions, to try and teach you how to memorize them. And then in the next topics, we will discuss the interpretational issues regarding TDS. But to start with, when do I pay my tax? Well, as a simple rule, I pay my tax when I file my return. That means all throughout the year, I am earning income. I will pay tax at the time of filing the return, self-assessment, under section 140A. That is how it should have been. That is how it would have been had everybody paid the taxes regularly, on time, honestly. But then, as you know, if you earned 20 lakhs here, by the time the year finishes, well, you've earned that money. You've either saved it, you've either spent it, you bought assets. Now, April, May, June, July, somebody tells you that you go to the department, file a return, or sit online and file the return, and now you have to pay close to 4,30,000 as tax, plus you will pay a cess of 3% to the government for the income you earned 4 months ago. You honestly ask yourself, will you actually get up and honestly yourself go and pay that tax, knowing very well that the department does not maybe know that you even exist? Because remember, so many people earning income in India, there is no absolute knowledge and database. The department will most probably not even be aware of whether you exist or not. If you have a small shop in one of the interiors of India and you're selling goods which are not on record, you're not issuing a bill, you are evading tax. Be rest assured. You will be levied penalty and interest and go to jail if you're caught. But if you're not caught, well, you're still earning a lot of money. And there is this general tendency, a thought process in our country which says that if we are caught, we will see, we will be able to get away. Now that thought process is not very nice. That is what leads to the stick approach, which is why government came up with the concept of advance tax. By introducing chapter 17C. Now, what was the idea behind advance tax? The idea was you pay your tax in installments, because paying it lump sum might not go down well with you. But the problem with advance tax was the same. You had to get up yourself voluntarily, honestly go and pay your tax. Again, that brings out or is dependent upon the the righteousness of the person who's earning the money. Now both these schemes have been relatively successful, but not so much. Very few of Indians actually pay tax, even today. The base is increasing, but that is only because the government has started catching people. One of the interesting ideas was chapter 17b, TDS. They say the payee or the person who earns income is not going to be paying the taxes. So might as well get the guy who's making a payment to him to deduct the tax and deposit it with us. So like you have the employer paying money to the employee. So we say, we have an employer who's going to pay 20 lakhs as salary to the employee. It is the income of the employee, that is sure. But the employer will be required to deduct TDS. That means whatever tax he is going to be liable for during the year will have to be deducted from the salary paid. Which means if we talked about 4,30,000, then only 15,70,000 will be paid to the employee. That means they are not trusting the people of the country, and might not be entirely wrong in doing that. That you will not have that money in your pocket. I have already received it from the guy who's making the payment to you. He will not be emotionally involved with that tax because he as it is has to pay you 20 lakhs. So that means he might as well pay me 425, me being the government, and pay you 1575. Now you're receiving only 1575. You don't have to actually go and deposit the tax, so you don't feel as bad. But what if the employee goes to the employer and they enter into a contract? And the employee tells the employer, why are you deducting tax? Why are you coming in between me and the government? You please give me that money. I give you an undertaking saying that I am responsible for depositing my tax on time. You are not responsible. You please pay me the entire 20 lakhs. I will go and pay my advance tax. If we allow this, then every payee will tell the payer that you please don't deduct. I am giving you the undertaking. And then he does not go and deposit. Again, the government does not get the money. So we now have rules as to who will deduct TDS, how TDS will be deducted. What if the payer does not deduct TDS? The interest will be levied on the payer. The penalty will be levied on the payer. He will go to jail. Prosecution can be enforced on the payer for non-deduction of TDS. And if that was not enough, we've done Section 25, 40A, Section 59, wherein non-deduction of TDS could lead to disallowance of the expenditure, which means that payment becomes taxable in your hands. Now, all these are methods to dissuade the payer to get into or to listen to the payee and not deduct TDS. He has to deduct TDS. So we have few people involved here. We have a person making the payment. We have a person receiving the payment. Now, is TDS deductible on income? Or is it deductible on payment? For example, a businessman gives money to the CA. The CA is a professional. Now, the payment made is 5 lakh rupees. Let's say this is made on 1/10/14. Now, on this payment, the businessman is to deduct TDS at 10%, 194J. We will do them in just a while. This is during the year. By 31st of March, the CA will now compute his total income and file the returns, assuming 31st July 14. While computing income, he will now apply the provisions of Section 28. He will say receipts are 5 lakhs. He will then claim expenditure. Let's say the expenditure is 4,90,000. Genuine, 32, 37. Therefore, income is 10,000. When he sees his total income, it comes to 10,000. There is no tax because it is below the minimum exemption slab, and I am assuming this is a proprietary concern. Now, is the payer required to estimate all of this? How can we ask the payer to look at the expenditure of each pay? He is not only going to make payment to one pay, he might be making hundreds of payments a day. So, rule number 1, TDS is not deducted on income, but it is deducted on payment. But under section 192, salary, TDS is deducted on income, and not total income, but salary income as computed under section 192. Now, before we start looking at the concept, let's first look at what sections are covered. Now, this is a chart which I would want you to probably remember and memorize by heart. We will try and fill this up. Is TDS a general concept? Is TDS deductible on all payments? For example, there is a shop that is making a sale of shoes. It has made a sale of 50 lakhs during the year. When it gets payment, is TDS going to be deducted on that payment? The answer is, we don't know. Let's have a look at what section or chapter 17b says. All sections here prescribe a particular payment on which TDS is deductible. Now I'm going to concentrate on the ones which are the main ones. There are more, yes, but we are going to look at the important sections here. Section 192 talks about TDS on salary. Section 193 talks about TDS on interest on securities, debentures, bonds. 194 talks about TDS on dividend. 194A talks about TDS on interest other than on securities. 194B talks about lottery, etc. 194BB talks about winnings from horse races. No other race, only horse race. $194D, $194G, $194H talk about commission. D is insurance agent's commission. G is lottery agent's commission. H is other agent's commission. Now 194I talks about rent of land, building, plant and machinery, furniture or fixture, whether leased separately or together. We're going to keep doing each one slowly. Let's first keep learning what the sections are talking, what payments are covered here. 194J talks about professional fees, fees for technical services, non-compete fees, royalty, and now director's fees. $194C talks about works contract. Then we have 194LA and 194IA, both concerned with immovable property other than agricultural land. 194LA talks about compulsory acquisition, and IA talks about transfer of immovable property other than agricultural land. Payments to non-residents are covered by 195. Other than those specifically covered here, 194E talks about non-resident entertainer, non-resident sportsman, non-resident sports associations. Let's for the moment concentrate on these. Who is required to deduct TDS? Obviously the payer. Now how does the system work? So we have the payer, let's say sitting in Delhi, is making a payment to the payee sitting in Chandigarh. Now the payer will deduct and deposit. Let's say the payer is depositing it online or depositing it to a bank. But this has been deposited in Delhi. Now there's the challan for deposit of TDS. In that challan, 281, the payer will have to get certain information. So he will quote his TAN number, which is a tax deduction account number which every payer required to deduct TDS will have to take. Now I will be doing the detailed procedures in the next topic. For the moment we are making a brief overview. And he will quote the PAN number of the payee. Then the payer will also file quarterly statements. You can also call them returns of TDS. Now these will be filed again online. Now we know all database central is in CPC Bengaluru. Now this data has reached there. Whenever the payee files the return of income, that goes here as well. At that particular point of time, the PAN number of the payee will help us search on the PAN number to determine how much of TDS has been deducted. We all know that a statement in form 26AS is generated by the end of the year, which the payee can go and check as to how much TDS has been deducted and deposited by as many number of payers who are making the payment to him. Now that statement or certificate gives the assurance to the payee or tells him how much tax has been deducted, which he can claim as a credit when he files the return. The payer is required to issue a TDS certificate to the payee as well. But as I said, we have the online model now, 26AS, we have the TDS certificate available there. So like I was saying, we will be doing the detailed provisions of filing statements, of your issuance of TDS certificates, of penalties, of interest, of calculations, but that will be a separate topic. What we are understanding here is that this guy has a lot of procedural compliances. If he does not apply for the TAN number, there is a penalty. If he does not file quarterly statements, there is a penalty, there is an interest. If he does not issue TDS certificate, there is again a penalty. That means he has to be looking after all of this. Now this requires, for a person who's dealing with a lot of people, you might require to maintain an accountant, you have to maintain books to make sure you're not making a default. Now the general perception being that a person who's doing business has a complete setup. When I say business, there is the profession as well. But if you look around you, salaried employees, people who have income from house property, people who have agricultural income. Now these are the people the government does not want to trouble with. So what they're saying is that the payer must deduct TDS, but if the payer is an individual or HUF, then the liability to deduct TDS will only come if they are covered by 44AB. That means if they are required to deduct or are required to get a tax audit done. The reasoning being again, now if a salaried employee takes a loan and is making a payment of interest, is that payment covered by TDS here? Yes, 194A. So the salaried employee is required to deduct TDS if we look at only the section.